What's going on, everybody? It's Stas here. So in this video, we're going to be breaking down the top stocks that I'm looking to buy heading into this fresh, brand new week in the stock market. And I also want to share with you guys what the stock market futures are looking like right now when it comes down to the S&P, the Dow, the NASDAQ, gold, and the silver futures. And we obviously saw a pretty big sell-off last week. The markets finally took a hit, and a lot of people were texting me, messaging me, Stas, should I sell my stocks? I'm freaking out. So I want to go over some psychology in this video as well, kind of where my head is at, coming from somebody that's been in this game for the better part of a decade at this point, about 7 years in the stock market. So a lot to go over. If you guys find value, hit that like button for me, consider subscribing to the channel, and check out all of the free links down below in the description box if you want to join our Strive Smart Discord chat, our Strive Smart Facebook group, and don't forget to claim your one free stock from Webull. And get this, guys, that stock's valued up to $1,600. That's also linked down below. All you have to do is deposit $100 into the account. You get a free stock, and I also get a free stock since it is an affiliate link. So let's get into it, guys, starting off here with breaking down the futures. And if you guys want to check out the video I made yesterday, I actually broke down some other stocks, the market's a bit more in depth. I'll link that down below. Check that out after this video. But we talked about how the markets got hit. NASDAQ went down about 10% from its peak to its low. The S&P went down about 6-7%. The Dow got hit the least, but still went down about 5%. And at this point in time, it seems like the futures are turning up. They're turning green. That's obviously a pretty good sign here for the bulls. The ES, the E-mini S&P 500 futures are up about 22 points, up 0.64%. The NASDAQ futures are up not that much, pretty much break even, but they're still up about 7 points, up almost 0.1%. And the Dow futures are up the most, up about 0.9%, up 250 points. And quick disclaimer here, guys, just because the futures are green right now does not mean that they're going to be green tomorrow and that the markets are going to roar back up tomorrow. For all we know, we could wake up and the markets could be gapping down aggressively. So don't take this as we're going to 100% have a green day tomorrow, because that's not the case. But what we could see is that it is a good sign that the futures are green. We can say that, hey, that is a good chip on the bull's shoulder at this point, and we could work with that. And what we can see is on this 4-hour chart on the ES Mini S&P futures here, with the up move today, up about 0.65%, we're pretty much solidifying a higher low on this 180 SMA, and I'm asking myself on this 4-hour chart, that is, I'm asking myself, is this where the S&P is going to continue its uptrend? Is this where we're going to gap up and maybe take out the all-time highs again? It very well could be, guys, and what I'm looking at, especially on this 5-day, 5-minute, and more on the 10-day chart, you guys can probably see it. I'm looking to see if the ES Mini S&P and the S&P itself, the index, if we're going to take out those highs from, what was this, on Thursday and heading into Friday. I think if we take out that level at about 34.60, 34.75, the futures are trying to get there. We're pretty far off, but if we take out 34.70 on the S&P here, that is where I think we could see a clear-cut reversal to the upside, especially if the ES Mini futures are able to break out of this 10-day, 30-minute resistance at the 180 SMA. I think we'll be smooth sailing from there if that does end up breaking. And until then, I mean, I guess we can technically say in the short term here, yeah, we're still in a downtrend on this 5-day, 5-minute. We're still under critical resistance levels, and we're still at risk of falling down even further. And you guys can see that here on the NASDAQ futures as well. Same thing with the Dow. I mean, on the NASDAQ, I wouldn't be full on the bull side until we break out of this high from a couple days ago, right around 11,800. I think until we break that, the bears are still in charge here in the short term. And on the Dow Jones, if we take a look at what's going on, I mean, yeah, we're doing well, but we're still trading under, in terms of these futures here, we're still trading under 28,500, which is a big level of resistance from last week. So watch out for on the S&P, the Dow, and the NASDAQ futures. And we haven't even looked at the NASDAQ yet. Watch out for this level, 11,800 on the NASDAQ. Actually, we did take a look at that. If we all break out of those levels, the bulls will most likely come back in charge, right? And also, another thing to keep an eye out on is the VIX. The VIX is the volatility index, also known as the fear index, right? So if we're seeing this creep up and the market's taking a hit, we might see a lot more volatility, obviously. And the VIX has been creeping up here, which does not scare me. It doesn't scare me, but it's raising up my antennas because, again, this is the fear index, the volatility index, and as this spikes up, as a swing trader, I'm a swing trader, guys, it does get a bit more, I don't want to say sketchy, but it does get a little bit more difficult plotting entry and exit points as the markets are more volatile, if that does make sense. I think a more volatile market is better for a day trader as opposed to a swing trader, but that's okay because I can day trade too. I know swing trading is my bread and butter, but I can also day trade, and as the VIX gets higher, we get more volatile. Again, it's going to be better for the day traders out there. So we're seeing all of these futures push up here, even gold. Gold futures are up about 3 points, up 0.2%, and gold is clearly in this wedge at this point. You guys can see it if I clear this drawing set and redraw it. You can see we're making lower highs at the same time as we're making higher lows. So it's going to be interesting to see where gold goes from here. If we break out of 1970, 1980, even back into 2000, I think that's going to be a huge bullish move, right? That's going to be big on a technical basis as well. But if we break, let's say, 19,000, or not 19,000. I wish gold was 19,000. I'd 10x my investment, or it'd be amazing. But 1,900. If we break 1,900, that is where I think we might start to see a push. Let's say 1880, maybe 1890. We'll see. But watch out the direction here, what it picks when it comes down to gold. And silver is turning up here as well, up 1.3%, up about 35 cents when it comes down to these futures. And watch out for 26, 27 bucks. It seems like this is a pretty strong support on silver, right on this 180 SMA here on the 4-hour chart. So if we get a rebound on silver, we can maybe play SLV, which is an ETF that tracks the price of silver directly. And we see potential here on SLV, guys, from 25 bucks up to, let's say, $27, $28. That's a move of around 10, 12%. Same thing here with GLD. GLD has a lot of upside as well, from 180 up to, let's say, $195, $200. And GLD, by the way, guys, is an ETF that tracks the price of gold, right? It's the same thing as SLV, but the only difference is it tracks gold as opposed to silver. So overall, the main futures I watch, S&P, NASDAQ, Dow, silver, and gold, they're all green. They're all looking great, but again, don't take this as a sign that we're 100% going to be green tomorrow, because things can snap and shift on a dime, and you'll learn that as you experience more in the stock market, as you get your feet wetter and more experience. You'll understand how the markets, a lot of the time, they do the opposite of what you think, which is why you always have to be ready and prepared for every situation that the markets throw at you. And before we get into these top stocks, guys, I was reading an article that kind of made me feel a little bit weird. It was a little bit eerie. And hear me out. And maybe some of you guys have heard this as well. Back on September 3rd in 1929, that is where the markets peaked out. That is where we hit an all-time high about 100 years ago, and the markets peaked out. And from there, they saw a massive decline. On September 3rd, 1929, the Dow Jones Industrial Average reached a record high of 381 points. At the end of the market day on Thursday, October 24th, the market was at 299 points, a 21% decline from the high. On this day, the markets fell 33 points, a drop of 9%. And these are the days that, if you guys know the terms Black Thursday and Black Tuesday, these were those time periods back in 1929. So it's a bit eerie because the markets peaked on September 3rd. Not the Dow. The Dow hasn't hit an all-time high, but the NASDAQ and the S&P peaked at on September 3rd. So is history going to repeat itself? Is this the start of the next crash here, similar to back in 1929, where we saw that massive drop? It could be. I just thought that was a little eerie, and I'd love to know what you guys have to think down below, since we're seeing that same thing happen now on September 3rd. And we all know, historically, Septembers have been very poor months for the market. So we'll see if something happens here, guys. We'll see. And again, I'd love to know what your thoughts are down below in the comments. So let's get into some stocks now. The first group here are the video game stocks. And I'll be honest, the technicals aren't looking the best. Starting off here with Activision. Yeah, we broke 81. Big support. We also broke $79 to about $80 this past week, which was also a big level of support here, which I'm not liking too much. So overall, it seems like the uptrend is, excuse me, guys, slowly starting to break, but I'm looking at it as an opportunity either way, especially if we're able to get Activision down to $75, maybe down to the low 70s. I'd be very excited about picking up some of this stock, especially leading up to the super cycle here of the video game consoles. I mean, we see the Xbox coming up, the new PlayStation's coming up, so this is going to be great, in my opinion, for video game companies, and I'm loving the sell-off here. Overall, I think Activision got overheated at about $90, and now we're about $10 off of those highs, so that's a drop of close to 14%, and for me, that is very, very interesting, and it's worth taking a look at, especially if Activision is able to get, again, like I said, down to the low 70s, mid 70s. I'm very interested in pulling the trigger. And another video game stock, of course, is EA, Electronic Arts, and this one is arguably even more attractive at this price point than Activision. It's fallen about 10% off its highs from 147 down to about 130, and I'm thinking if EA is able to hold 130 here, and hear me out, guys, 130 is where we actually topped out back in September, or actually no, February of 2018. That was a resistance. So judging on that, on this 3-year, 1-week chart, I mean, yeah, we saw the healthy pull down on EA, but we should be holding 130. I think we should hold 130 if we see some consolidation there and a rip back up this week. I'm very interested in adding a position here on EA. But like I said, the markets, they do irrational things sometimes. You know, they do what you don't expect. So this could very well go lower, and that goes into kind of the psychology here that I'm understanding that, yeah, this could very well be a dip in the markets, but it could very well go lower, and this could very well just be the start of the dip. So I'm not looking to load the boat quite yet, throw all my money in at once, because that could end up ugly. You know, if you throw in all of your cash at a position at once and it goes down lower, then you don't have any more ammo to play with, and you're in a pretty tough spot. So for me, I'm looking at scaling into these positions, but I'm being patient. I'm being cautious, knowing that we could go much, much lower, and maybe not much lower like we did back in March, because that was a freak 1-in-100-year event. But maybe if we see a 10-20% correction overall in the markets, something similar to what happened about 80 years ago on September 3rd, you know, how we dropped, like I said, about a couple minutes ago. You know, if we see something similar, that is where I'm looking to add more money. But again, just being patient overall and not forcing anything. And another stock here that I'm liking is called MELI, also known as Mercado Libre, the Argentinian e-commerce beast, growth monster, and this is actually held in many of Cathie Wood's active portfolios, active ETFs rather. I forget which ones own it, but it is held in some of those ETFs there, and we're seeing a pretty good pull down in the stock from about $1,300 down to about $1,000. We're at the 180 SMA here on the 4-hour chart. We've seen around, let's take a look here, I think a 15-20% sell-off. Yup, right around a 20% sell-off from the peak. So I'm interested in Mercado here if it holds 1,000, and especially if it gets under, 900, 800, 700, that is where I'd load the boat on this particular stock. But actually, let me take that back, because I haven't fully done, I've done research into the company, but I haven't done extensive research to the point where I'd load the boat. But if we do get there, we'll see, guys. And if I extend my research a bit, we'll see. Anywhere from 700, 800, I'd be interested in buying. And overall, if we hold this 180 SMA, and we rally from here, that could also be a buy point on this 4-hour chart. Let's say maybe at $1,100 if we break that point. So watch out for Mercado Libre here, ticker symbol MELI, and arguably my favorite stock right now is Workhorse Group, guys. Ticker symbol WKHS, and I'm loving the strength that it showed on Friday, quite honestly. Or not, yeah, it was on Friday. We went up 11.5% as the rest of the market was getting crushed, and we're seeing it clearly hold a higher low at this 180 SMA on the 4-hour chart. Held it at about $17. We broke $18, and now we're gunning for the infamous resistance on Workhorse at $20. And I think if it breaks 20, watch out above, guys. I think we're headed straight to the mid-20s. Heck, maybe even $30. Call me crazy, guys, but I think Workhorse is going to those points. And I'm looking at some calls, actually. I haven't looked deep into the options chain recently. I did trade it last week. I traded an option, call options last week, but now I'm looking at some maybe in November, December, some call options. So we'll see what happens there with this particular stock. But overall, needless to say, I am very, very bullish on Workhorse. And we already talked about Tesla in yesterday's video, but I'll mention it here. And again, go check out yesterday's video if you want to see some other stocks not mentioned in this video that I'm looking to buy. That is linked right down below, but we'll overlap for this stock because, hey, it's worth overlapping for, and it's Tesla, guys. And we got some news that this go around, Tesla's not going to be included in the S&P, and for me, that is not something that I'm freaking out about, that I'm losing sleep over. Quite honestly, I think this will blow the stock down a little bit more, which I think is needed, right? We've seen the stock sell off from 540. Now it's at about 420, but as that news came out on Friday after hours, the stock went from 420 down to about 380, 385. So if we sell off even further, guys, here on this S&P 500 news, and mind you, guys, a lot of people, maybe not a lot, but a good amount, we're pricing up the stock because of this S&P 500 inclusion. So we might see some selling from those folks. You know, we might see some shaking of the weak hands, if you want to call it that. And I'm all for it. I would love to see Tesla at 350. Heck, maybe even 300. I'm not sure if we get there, but I would love to see it at that lower $300 range, and I'd buy it. I'd buy a lot of it, quite honestly. And one thing worth noting with Tesla is Battery Day. Battery Day is coming up, and I'm sure Elon, good old Elon, has some trick up his sleeve when it comes to Battery Day. So watch out for Tesla, guys, and a couple other ones here, some tech names. And mostly, guys, I'm watching a lot of tech stocks this week. As you guys know, the NASDAQ got hit. Tech stocks in general got hit very hard. So I'm not in a mode where I think tech is going to crash completely. So I'm looking at a lot of these tech names as dip buy opportunities. But again, I'm not looking to rush into it. I'm being patient, understanding that, yeah, this could sell off even further. So I'm looking here at, let's take a look. Wow, it looks like my notes are messing up with me here, guys. Did I just delete my notes? Don't even tell me I did that, because that's not going to be good, because I'm going to have to go off the top of my head now for the rest of the video. But yeah, it looks like I did delete my note. Oh my goodness, guys. Anyway, I have the stock list in my head. Let's go over this. So the next one I wanted to talk about is Apple, AAPL. Apple is one that I already own, and we're seeing, similar to Tesla, a huge blow off the top from 140 down to about 115 points here, and it actually sold off to 110 earlier. Let me know in the comments, guys, if you picked up some Apple at 110. But for me, I'd love to add more Apple, especially if it gets under 100. If it somehow gets under $100, maybe to 95, 90, I'd load the boat on Apple. But understanding that it might not get there, honestly, it might not shed another 30 points off of here. That, if you guys understand, that is around another 20% downside. You know, I don't know if Apple does 20% downside here, guys. So let's say if it holds this 180 SMA overall, maybe it sells off another couple percentage points, whatever, you know, and we start to head back up. This could be a fantastic opportunity in Apple, right, on this uptrend. And NVIDIA is another one, NVDA. We're holding the uptrend overall on the 4-hour 180 SMA. We've shed about $100 off the top, and no one's gonna argue with you that NVIDIA was undervalued or it wasn't frothy at 590, 600, because it was. It was very overbought, overextended, so this pull down is much needed, very healthy, and I'm thinking overall, if 470, 480, 500 holds, this could end up rallying up very, very similar to Apple. And crap, guys, what were the other ones on my notes here? I can't believe I just deleted it. It's weird. Sometimes I hit the delete button by accident on my phone, on my notes. Oh, here it is, recently deleted. Oh, my goodness. Here we go, guys. I pulled it right back up. So Adobe, ADBE. This is another one. ADBE selling off pretty aggressively, down about $50 off its highs. It seems like it's holding 470, 475 as a support. That is a good sign. And I would love to add Adobe anywhere from, let's say, 460 to 480. And if it gets under 460, heck, maybe down to the low 400s, I'd load the boat on Adobe. But I'm liking it here, 460 to 480. If this uptrend holds, very similar to Apple and NVIDIA, they're looking strong. And some riskier plays are going to be, and these are more, well, all of these have a lot of momentum, but these two have a lot of momentum. Rocket, RKT, it's a bit riskier. It just IPO'd, but we're about $10 off the highs. They just reported earnings. The earnings were decent. We're down about 30%, so this could be a comeback stock on this momentum that it's been seeing over the past couple of weeks. And same thing here with Shill, ticker symbol SHLL, which is merging with Tortoise, or Shill is Tortoise. It's merging with Helion, I believe, sometime in September here. And this stock took a hit from $60-ish down to about 41, but now it's recovering. You guys can see on Friday we had a pretty solid day. We hit about $40, ended up closing up to about 50, so a $10 swing on Shill here. And mind you, it's very volatile. Be careful, but there is money to be made. There is money to be made here, in my opinion, with Shill. And I'm not looking, quite honestly, guys, I'm not looking at this as a long-term investment at this point. That's just me. Don't get mad at me. That's just me. But I am looking at it as a trade. So I'm watching those, and we have some earnings coming up. We have Work, also known as Slack, reporting earnings this week, ticker symbol WORK. This one's off about $11 from its highs, and we're at a pretty big support at around $28, $29 here. This is where the stock struggled back in the beginning of 2020, and now it seems like we're holding it as a support. Do we rally back up to, let's say, $33, $35? Maybe. We'll see. That is where I think there is potential in the stock. And another one here is Oracle. ORCL, they're also reporting earnings this week. The uptrend seems like it's holding here on the 4-hour chart. This could very well be a nice bounce back play back up to 59, heck, maybe even $60+. And another one here, ticker symbol GME, also known as good old GameStop. is up a good amount, guys. GameStop went up from $5 to almost $9 recently, so it almost doubled up, and it's selling off now a bit, down to about $7.65. Earnings are coming up here on the 9th of September, so hey, maybe there's a move to be made here in GameStop, maybe above $8-9. We'll see. And a stock here that I talk about a lot that is super oversold that I love is Virgin Galactic. And hear me out, this stock, ever since it's been selling off, it's obviously been in a bear market. I mean, it's gone from $27 to about $16. That's a 40 to 50% drop there, more like 40%. And we're approaching a point where we've held many times in the past. If you guys realize, Virgin Galactic's gone to about $14-15 over the past couple of months many times, and we've held it and we've rallied up to anywhere from $18, $20, $25. So I'm thinking Virgin Galactic is a pretty safe, it's not safe, it's risky, it's very risky, guys, but I like the risk-reward ratio. The closer it gets to 15, 14, $14, and if it somehow gets to those levels that we were back in the crisis when the crisis first kicked off, if we somehow get to $8-9, I mean, I'm going to dump a lot of money into Virgin Galactic, guys. And yeah, it is a spec position for me, but I'd buy a lot there. I'd buy a lot there, as I do think this company does have potential moving forward. I like the concept. I like the leaders there. I really like Chamath Palihapitiya. Okay, I can't end this video without saying his name right. Chamath Palihapitiya. That's how you say it. I love that man. I think he's very smart guy. I think he's one of those Warren Buffett type of investors for our generation, and I want to have my money, some money, with him. I think he's very smart. He's like an Elon-type innovator, and maybe not as great as Elon, but he's up there. He's up there for me, and yeah, I'm loving Virgin Galactic here, and overall, that is it. That's it for this video. I mean, I hope it wasn't too long for you guys. I hope some of you stayed till the end. If you did, let me know in the comments. Let me know by saying I stayed till the end. Drop that comment, and if you did, I really, really do appreciate you guys. And don't forget to join our Discord chat. Do not click off this video before joining our Discord chat, our Facebook group. It is free of charge, and you can also claim your free stock from Webull. I don't know why you guys are waiting to do that. Go use my link down below, deposit $100 into the account, and you get a free stock valued up to $1,600. That's literally free money, guys, and you can take that 100 and just take it right out of your Webull, again, if you don't want to invest with Webull. So get your free money, link down below, and by the way, I also get a free stock if you do use that link and deposit $100. I really do appreciate it, as it does help me and all the free content here on YouTube. Thanks again a lot. You guys mean the world to me. I'll catch you all in the next video. Don't forget to check out the video from yesterday for more stocks. I'll link it right here. Stay safe out there. As always, guys, I'll catch you all. Peace out.